They do their jobs, and as opposed to a lot of bigger banks, they have AMCs and literally they have hundreds of appraisers, right? We just got a handful. They got hundreds, and literally you got people. We had one. Somebody told a story yesterday where an appraiser moved from out of state, moved to Hickory, signed up for covering Charlotte or in Oakboro, and so the house was in Oakboro, and it was a mess. And they ended up bringing the value in like 40 grand light. Had the borrower go out twice to take additional pictures that he had forgot to take. And then so it was just it was a colossal, super stressful situation. And Fairway came in, we got a local appraiser out, and it actually appraised 4 grand over, right? So it's a plug for Fairway for our group, but just know we've got local appraisers that know their stuff and we trust their stuff. So moving on, let's talk about appreciation. I think that's a hot topic right now with home prices, and I've had some people tell me, man, things are appreciating 1% a month. In some of the cases, it's like, hey, we're seeing 10, 15, 20, 25+% appreciation year over year. How do you account for that on an appraisal? Is it a line item adjustment? Is it a time adjustment? Is there a comfort level that you take as far as addressing that?
Yeah, I knew it wasn't going to be long before we were going to hear some appraiser bad stories.
I had to share it.
Come on up. This is going to be easy. Yeah. That's what. There is a line item. It's actually it's about the second line item on there. We have financing, right? There's creative financing. We make an adjustment for that. The next one is when the house went under contract and when it closed. And on that line, that's where we're able to make line item adjustments.
Okay.
And I've been around, as you can probably tell, long enough that I've made positive adjustments and I've made negative adjustments.
Yeah.
If I use back in 2008 and 9 that Jeff referenced, I had it was a divorce case here in Concord, and the comps I used in 08 or later 07, the values had gone down by the time this went to trial. So they were actually negative adjustments.
Yeah.
That's a good example.
Yeah, that's good. I mean, it's all based on closed comps. Now, from an appreciation standpoint, client goes under contract, and literally there was houses that are closed comps that sold 2 months ago, 3 months ago, and now we're selling even higher. How do you account for that? Is there as far as comps that have sold within the last 2 to 6 months, is there a comfort level that you go off of, or you just all base it off of closed comps?
Yeah, absolutely. So we may talk about this later too, in terms of the search, but you start out looking within 90 days, right? I mean, the least, I guess the easiest way to put it, the least amount of adjustments, the best appraisal we're going to produce, right? So therefore, if we didn't have to make a time adjustment, that'd be great. If we don't have to make a square footage adjustment or an age adjustment or anything, it's great. So we want the most recent sale we can find. To have 3 sales close within 90 days in the same neighborhood doesn't happen that often, unfortunately. So we do, that's, how we do our search and then kind of expand it out.
Got it.
Yeah.
Got it. And then as far as things will be listed for, X. And then next thing you know, in this market, I just feel like it's a bidding war. Next thing you know, it's like, hey, 20, 30, 50, 75, $100,000 over list. Do you take into account the original list price when you're appraising, or do you just go on contract price?
Well, we do, honestly. I mean, we see it and we have to report it. We report the list price. And I had an appraisal out in the Cox Mill Road area that's, things are going up really quick out there. And I had a reviewer ask me, how could the price go up that fast? And then why did you come in under the purchase price? I thought, well, dang, that's 2 different things. And you're saying I went up too high, and then you're saying, well, how come I didn't appraise it for the appraisal price? But, that happens. And, but we absolutely know the list price, we report it.
Yeah.
We factored in, we assumed that you used, you went through the same process we do, and you listed the property at what you thought it was worth.
Yeah.
So we do factor that in.
Okay, cool. That's good to know. What about in like certain pockets, certain neighborhoods that are just on fire, super desirable, great school district, and like everybody wants to be on there, right? They all want to buy in that neighborhood. And so when the houses hit, it goes up, higher than what, normal market. Do you take into account neighborhood trends at all?
Yeah, we do. I mean, every adjustment we do, they sent me the questions a day or two ago, and I wanted to really prepare, but, kind of like high school, I got in here, and I'm like, dang, I should have prepared more. But I thought, you really want to hear it real, right? We want to keep it real like it really is. And all our adjustments are market driven. We have to abstract those adjustments from the market. So we have to have some data. And if we get called on the carpet, we got to have in our work file, where'd you get that adjustment? Why did you make a 1.5% per month adjustment? Well, we got to have something in our file that says this is why we did it.
Yeah, makes sense.
But yeah, individual neighborhoods. I'm getting ready to sell my house in Carriage Downs. And
Don't say that to me.
And I kind of feel like I'm gonna be in the same boat y'all have all been in here. I'm probably, hopefully, gonna get a couple offers, and they're probably gonna be above the appraised price.
Yeah. I mean, it's always interesting to me that when you start looking at that, and because again, it's like, well, good grief, the house is worth what the buyer's willing to pay for it, right? And it's like, it's not that case, because honestly, from a banking standpoint, the appraisal is done to try and establish a value to lend money on it, right? Because at the end of that appraisal, these loans have hundreds and hundreds of thousands of dollars that the bank is lending out, right? And so they have to forget what the listings are listed for. That doesn't mean it's going to sell for that. It's really it's kind of a skewed system, in my opinion, because you're literally going backwards, right? You're going from the date that inspection's done, and honestly, in most cases, 12 months back, right? So you're looking at past data, not future data. And so I'm sure it's just always a moving target for you to try and, in this market, establish value.
Yeah, it really is. And we use historical data, right? It's something that's already happened. And then a lot of times, in a scenario like Jeff just laid out, we use pending sales. And a lot of times we're required to use pending sales to help support the value that we came up with.
Yeah, so. I love it. So from an appraiser standpoint, right, because this is something that we wanted to cover this as well. Is there a best way to comp a house in today's market to try and protect clients so you're not obviously, overbidding, or like, is there any advice that you'd give, our realtor partners, that as far as when they're going to price the home?
You go through the same process I do. Like I said earlier, you're trying to use the most recent sale. As an appraiser, when we're trying to select comps, we typically look at what the predominant feature of a property might be. And that can vary a lot. Going back to my house in Carriage Downs, probably the predominant feature is it's in Carriage Downs.
Yeah.
It's location, where it's at. I don't think there's anything on the market. So then obviously I'm gonna select comps from Carriage Downs because that's the predominant feature. If it's a rural brick ranch, then I want to find other rural brick ranches.
Got it. Yeah. Okay. So trying to look for like properties that are similar in size and age and appeal, and
in this market, the most current ones you can find.
Cool. Good deal. Okay, let's switch gears on comps. So can you walk us through the process of how you select comps when you're doing an appraiser or an appraisal?
Yeah. So I just mentioned a rural brick ranch. I had one that was vacant. I think it was probably an estate. I did it Monday. And so I started my search, 90 days, I went a mile. This is in Midland, nothing. I went 2 miles, nothing, 3 miles, maybe I had a comp. So then I went 180 days and went through that again, a mile, 2 miles, 3 miles. So I came up with a couple potential comps, right? So then I expanded it to 365 days and the house, a door down or so. I mean, same road right away. So, you know, we want to avoid making time adjustments, but it would be a mistake not to use one on the same road, right?
Yeah.
And it was actually a very similar house. So at that point, then we have to determine how much property is appreciating.
Yeah, that makes sense.
Yeah.
I like it. So when you're doing this, are you trying to stay in the same zip code? I know some of us are covering like that North and South Carolina, right? So it's like, hey, if a property's right on the border, I know there's some neighborhoods in Charlotte that literally half the neighborhoods in North Carolina, half the neighborhoods in South Carolina. Like, do you go into another state or would you go into another zip code? Or are you really trying to hone in on just that zip code? Just curious.
Yeah, I mean, you know, school districts are a big deal. They're a big deal here in Cabarrus County. So I like, you know, if I have some in Mount Pleasant School District, I like to stay in the Mount Pleasant School District. Some people select homes that way. That's how we ended up in Cabarrus County, actually.
Interesting.
There are obvious neighborhood boundaries, which we describe on the appraisal, right? That's required. We have to have a north, south, east, and west. So that tells the person reviewing the report, this is what I thought was the neighborhood.
Okay.
We're talking rural. Again, Carriage Down, Laurel Park, Most Acres, we know what the neighborhood is there, right? But some of these, when you get out, it's like I went north to Highway 49, I went south to 2427, you know. So we did define the neighborhood, but the term that we use when we're trying to substantiate whatever we did is a substitute property. So when you have a buyer, would they look at my property I'm appraising and the comp I selected, would they look at both of those when they were making a buying decision? And that's what we try and do.
I like it. That's to me, that's a good rule of thumb there. So what about price per square foot? I'm hearing that a lot. You know, well, the price per square foot is this. Do you take that into account when you're doing appraisals?
Well, it again is right there in front of us. We see what the comparables are selling for price per square foot. Sometimes when I come up with an opinion of value, I go back and look and say, well, what's my price per square foot?
Yeah.
Right? Is that in line with the comparables I've selected?
Yeah.
And a lot of times, not a lot of times, but sometimes reviewers, underwriters, or other appraisers that are reviewing our work, they want that bracketed. They want per square foot to be a little below and one a little above.
Right.
So
Interesting. Okay. Because I've always heard like, hey, you really don't want to use price per square foot because technically one might have a pool or you might have a backyard, done a bunch of stuff to it or, upgrades into the interior. So
right.
Price per square foot is kind of hard to.
Yeah, that's exactly right. Because, there's different, not all space is equal.
Yeah.
Is the easiest way to say it. I mean, there's some, properties that have expanded a room. They have a sunroom. It's heated. We count it as gross living area, but it might be as big as this room. Well, that wouldn't be fair to compare that back to,
Right.
A traditional house.
Yeah, I think I had one a few years ago. I swear it was a $250,000 house at the time, but they put like $150,000 pool in the backyard, right? So it's like, dude, you're the white elephant, I don't know what to tell you. We can't give you dollar for dollar value for the pool when everything else is selling for $250. So it was just it is interesting when you start talking about that. What about unfinished basements versus finished basements versus, does it make a difference on having a walkout basement versus not?
Basements, as y'all probably know, especially on the 1004 URAR, absolutely, if it's below grade, we have to segregate it out. But that doesn't mean we're not giving it a value. Or we're definitely giving it value, but all basements again are different. I mean, a basement here in downtown Concord is sometimes almost like a walk-in crawl space, right? You know, some of the older homes, they were sort of an afterthought, really. But if you go to Lake Norman, a basement there is finished to the same quality as the first and second floor.
Right.
And they're almost expected. So, you know, all those are unique.
Got it.
Yeah.
Got it. Is there a different valuation system for like a VA, FHA government appraisal versus a conventional appraisal? I've had people ask me that.
Well, the value is the same. You're after the same opinion of value, but as you might would expect, the government has a few more rules.
Yeah.
And their focus tends to be more on safety, livability issues,
right?
And repairs. The buyers, I guess, you know, since those mortgage loans are a little less typically, sometimes,
Yeah.
they don't want somebody to buy in there and then they have, you know,
So buyer protection kind of stuff.
yeah, buyer protection
Yeah.
stuff, lead paint, you know, if it's built before 1977, all these issues. You know, from an appraiser standpoint, they require a little more. They want us to make sure we take a picture of the attic, we take a picture of the crawl space.
Right.
And we don't typically do that on a conventional loan.
So on an FHA loan, or if you've got somebody that's going to market the house for FHA financing, but like, hey, you see there's, you know, a stairs with no handrail or, you know, peeling paint. Are there targeted questions that our realtor partners can ask the client? Like, hey, if we're going to market this for FHA financing, do we, you know, you might want to, we need to address this and this because it's definitely going to show in an appraisal. Would you say, is there, you know, is it like, hey, what year was this house built? And if they say it was prior to a certain age, then, you know, hey, we need to, like, and there's peeling paint on the window seals, or, you know, hey, we're going to have to address this if we want FHA financing, just to throw that out there or not, or?
Yeah, definitely. If you were going to advertise it or market it as FHA, I would take care of all the repairs up front.
If you can.
If you can, you know, like I said, I'm getting ready to sell my house. I tried to do that, but I'm sure a home inspector over here is going to find something wrong with my house. You know, but,
on the flip side, there's a lot of sellers that are like, hey, man, I'm selling it as is. So buy it if you want to buy it. If you don't, that's okay too. So it's just good information to know. We're gonna have like we're gonna hold, if you don't mind, we're gonna cover the rest of this and then we're gonna open up for questions if that's okay. Okay, cool. If you've got it and it's you want to.
I just wanted to ask if there's a time limit for when the appraiser can come back and ask for repairs. I had one that the appraisal had been done over 3 weeks. There was the appraiser forgot to put in the appraisal that the handrail and didn't tell us until 2 days before. So I didn't know if there was a time limit, and that's why I just wanted.
So the question was, is there time limits on repairs for FHA?
Well, they came back with me and asking, you know, saying this had to be done.
This had to be done. So the appraiser did not originally have it on the report, but then it got added afterwards. A lot of times that'll go through underwriting. The underwriter notes it. No, that's not the case. Interesting.
The appraiser, it was in Lexington. The appraiser said this has to be done for FHA.
Interesting. Okay. Is there a time limit on that?
well, I've never heard anything like that. I'm sorry. I don't have much insight into that. I do FHA. I don't do a lot. I was a FHA reviewer appraiser way back, a long time ago. I'm not sure how that scenario, I was going to say exactly what Jeff said. It sounds like it went through review. They do look at our pictures. We take pictures of everything. They look at it and they go, hey, that looks like that qualifies, but that needs a handrail.
Yeah.
But you're saying that wasn't the scenario. I'm not sure how that, you know, honestly, most of us, you know, most all appraisers too, I should say, or, you know, they want to go out, do a good job, get paid,
Right.
and then move on to the next assignment. And so when something comes back, slows you down, you got to go back, got to get a new comp, got to go back, take a picture of that comparable, all that kind of slows us down. You know, I have had an agent tell me that all appraisers are angry old men. You know? That's not true. They really are. They usually are old men, but,
We're seasoned. That's right. So,
Seasoned.
what about like with, we do get this a lot, people come in and they have pools and like massive outdoor living spaces. How do you, I know that's a tough question too, but like, how do you account for that?
Yeah, I mean, that's
If there's
kinda-
no other houses that have in like to the non-outdoor living spaces or like, hey, I got an above ground pool versus, some $200,000 just backyard oasis. How do you account for that from a value standpoint, or can you?
Yeah, well, we can. Above ground pools, we give no value. We typically act like they almost don't exist. And so if you have decking that goes around it, really, we don't give that much value. Pools are really interesting, and a lot of times it depends on the market. If you're in a neighborhood that has a pool, a swim pool, tennis neighborhood, typically those homes that have pools, it contributes less value. In my case, I can walk up the street and go to the pool. So why would I have a pool in my backyard? But then there are examples like going back to Lake Norman, there's extravagant pools and spas and terrace and everything. And it almost gets to be the norm at, up the point and stuff like that.
Yeah.
So yeah, they absolutely contribute value on a lower scale. Fire pits are really popular these days. And, what we're trying to reflect is when you take a buyer out there, do they mentally, give that fire pit some value in their mind,
Yeah.
And right now they're, like I say, with mild temperatures here and everything, people like it. I'm gonna sit out here with my children and do s'mores or I'm gonna sit out here with my neighbors and drink wine.
Right.
We're in the second, we're B, but, those are becoming more and more popular,
Right.
outdoor living spaces.
Yeah. Cool. Do you ever take multiple offers into consideration when giving value?
Well, we don't in terms of giving value, and supposedly we don't give value, right? The value is what it is.
Right.
We provide, an opinion based on facts. But most of y'all point out to me that the home was on the market 2 days and I got 10 offers.
Yeah.
Somehow y'all managed to let me know that.
Well,
So, we think about that. I mean, you have to. You think, if there's 10 people, that want this property, and a lot of times I see all the offers. Some of you do a spreadsheet, and you have to think about that. I brought the definition of opinion of market value, which is that's what we're working toward. And it's interesting. I need to go back and read it every so often, but we absolutely do consider that.
Interesting. As far as, and I'm more just curious on, to me, this is huge. So when our realtor partners are listing a home, I mean, because I've had some agents that are like, hey, you know what? I don't even want to piss the appraiser off. Like, I don't want to, they do their job. I'm not trying to get in their way. Do you like it when hey, we had a new roof put on in 2019. We had new gutters. We had the house painted. We had the pool resurfaced. We had a new kitchen, and in the dates that it were done and the cost. Do you like that if they add additional comps that maybe weren't listed or on MLS? Do you like it when they itemize that stuff out? How would you like it? Well, first off, do you like it when they leave that? And then when we leave that information to you, how would you prefer it?
Well, the answer is yes. And when he was just asking that question, I was thinking I was in a continuing ed class in Chapel Hill, and again, everybody's old like me, and there was one young guy in there, and that he was in the Raleigh Triangle market, and he said, "There's one company, as a matter of policy, that they're trying to give me all this information, and." He was really perplexed about it. They're always meeting me there and they're handing me information. And the guy teaching class, he looks at some of us old guys and goes, "Is that okay?" And all of us go, "Absolutely, it's okay."
Yeah.
Love a sketch, we got to verify it. We check it. I measure with a laser measurement, so it's pretty easy to do. But the comps you use, absolutely, we'll look at that. It's our job to determine what information you gave to us is relevant, but all the information is great. Especially, as Jeff just mentioned, in terms of repairs, roof, HVAC, I often just put that right in the report. Roof 2019, HVAC 2018.
Yeah. Do you want to put cost on it, or, you know, like, hey, the roof was $17,000. Do you want that in there or leave it off? And do you want the date that it was installed or leave that off? Do you want to just put, because, you know, I've had people like, well, yeah, the kitchen was updated. We updated the kitchen to a full remodel in 93. You're like, okay, well, great. You remodeled the kitchen in 1993. Like, that's fantastic. Like, it's not going to give us any more value today, you know, but do you want the dates that stuff was done?
The dates are great. The costs, not so much. I've recently enclosed my crawl space and paid a crazy amount of money. I don't think the appraiser comes to my house is going to care how much it costs me.
Yeah.
But he's probably
I've done
satisfied to know.
I like it. So I wanted to give us some time because this time is almost wrapped up and we're going to be moving on to the next section. Next, does anybody have any questions? I wanted to open up to some questions. Can you, we'll pass this off if we can. And then Pat, if you can just repeat the question.
Hi, Pat. Kelly Hudson. We used to
Hey.
do a lot of business together.
Sure.
I thought you retired.
I wish I had.
I figured you had by now. Can I use a comp? Can you use a comp that's not the MLS as a GIS?
Yeah, we just have to be able to verify it, and verifying it can be really difficult.
Oh, really? You
They-
can't just take what's in the GIS as verification?
No.
Okay.
And we're supposed to have 2 verification sources.
Okay.
And, you know, I've heard horror stories of appraisers going before the appraisal board, you know.
Oh, okay.
I mean, they truly would like us to call you on every sale, right? Kelly, did this sell for this? You say yes. What kind of condition was it in? You know, y'all would start recognizing my number and not taking my calls. I know you would. So typically, we verify with tax records and MLS, and I don't think anybody's gotten in trouble for that much. But we would almost need the settlement statement because we have to verify the financing, and typically that's not available, you know. So it's difficult, and you know, Fairway Mortgage might can speak to this, but they tend not to like it when we use those,
Okay.
you know. But a lot of times I'll use it in an addendum and say, this reportedly sold, but couldn't verify the financing of the sale.
All
You
right.
know. But mentally, we're absolutely, you know, this one next door just sold.
Just so.
And it's really more now than it's ever been. Because I just, you know, I can only remember back like 10 days. That's why I lose all my arguments with my wife, right? But I mean,
Preach.
Yeah, just over the last 10 days, you know, there's so many sales where, you know, a child is living in the home and the parent's going to sell them the home. I do it a lot. I've had 2 or 3 of those in the last 10 days.
Interesting.
But you know, with the market as hot as it is, some people are saying, I'm gonna sell it myself on Facebook. And that makes it tough on us. And then I bought a home last year that I'm moving to. And a realtor said, we want to use this, can we put it in MLS? And they did. I said, yeah. So they put it in, and then when I looked at it, you know, several weeks later, I'm like, it's got 3.5 baths, not 3 baths. I said, I need you to correct that because I use that information, right? All appraisers, we use that information, so we need it to be correct, you know? And technically, again, we can get in trouble because I'm going to compare that home to another home. I'm going to make an adjustment for a home that has 3.5 baths versus 3. And they're going to say, yeah, you did that wrong. That house has 3.5 baths.
So you're not willing to go knock on the door of that subject property and be like, hey, I'm trying to use this as a comp. Can I get the closing disclosure? Take a picture of it, walk the house, take some pictures. You're not willing to do that?
You know, as Kelly said, I've been around a long time. I haven't been shot at yet, you know, but,
I'm
you
just
know,
kidding.
man, taking taking comp photos can be a harrowing experience
bet.
sometimes. And, here in Cabarrus County, especially when we're doing homes on acreage, most of the time you can't really see the home.
Yeah,
So,
yeah.
and, I've quit creeping up the driveway just to get a photo. I'll just take a photo from there and then we use the MLS photo. And that's become accepted now.
I like it. Anybody else have any questions? John? Sure.
So close.
Right.
Hey, Pat, in all candor, I really appreciate you doing this because this was a hot seat, that kind of thing, I would think for you. But I think most brokers would say, what's the market value of a property? What a willing buyer is willing to pay, what a willing seller is willing to accept.
Right.
Seems to me most appraisals, even nowadays, most seem to come in close to that contract price. How much of a factor is the contract price in your valuation?
Well,
Sorry, Pat, can you repeat that?
So the question was, the question was, how much do you factor in the contract price versus what someone's willing to pay? Because you've got somebody that's willing to buy it, someone's willing to sell it, and they're going so high over asking, how much do you lean into the contract price? Is that right, John?
Well, obviously we see it, and one of the first things we have to do is say we verify the sales price. So they won't accept appraisals anymore unless we say we read the contract. So we know it. We know what the purchase price is, but our value has to be supported. And I've just started this thing out talking about 2008, 2009. I was an appraiser during that period and after, and there were a lot of people, they call it a great mortgage meltdown. I've been in a class, they're standing there and say, this couldn't happen if it wasn't for you appraisers. This wouldn't happen if it wasn't for you appraisers.
Wow.
And they turned around and at one point I had a client that was sending me a lot of reviews. You go back and review a home in 2008. And I'm doing the review in 2012 or 14, and it looks like, it was a horrible appraisal until you really look at it and go, well, that home sold, and that home sold, and that home sold. You just forget that those values got so high and then everything dropped. So, that's in the back of the mind of appraisers that have been around as long as I have. And that's not totally answering your question, but they're aware that this could come back. And they do come back. They live a long time and they come back, they get reviewed. Every report I submit now, I have an E&O button. I mean, just think about that name, errors and omissions insurance. That's kind of a bad start right there, but it's a button and it checks my report. We also, I think, would be interested in kind of talking too much, but we have in my appraisal software, when I put a comparable in, I have a button that can tell me what my peers, how they judge that sale, right? So we have condition, is C1, 2, 3, 4, 5, and quality C1, 2, 3, 4, 5. So I can see what my peers who may have appraised that property, how they rated that property. Yeah. So
it's got to be extremely tough in my opinion, because I'm looking at it and I have people, I still have people call today. They're like, hey, I'm I want to buy this house. It's really an investment, but how can I treat it as either, a second home or, a primary? Can I treat it as a primary? And I'm like, look, I'll be honest with you, my ability to provide my family is, if you bought this and this went bad, I could lose my license, I'm not willing to do that. Right. So if it's truly an investment, then let's treat it as an investment. If it's truly a second home, then let's treat it as a second home, because now they have people that are hired door knockers that will knock on the door and be like, hey, is Joe here? That's my landlord. It's like, oh, okay, well, we're going to call that in and call that no, so it's like, it's a big game here. So next question.
Yes, hey Pat, I'm LaToya with Premier. You said earlier that some agents give you a spreadsheet of the offers that they receive. Does that affect your appraisal value?
So the question was, sometimes people will give spreadsheets of comps or close or the offers rather all the offers, and does that impact appraisal value? Is that right?
No, it shouldn't impact appraisal value. No, and I'm not recommending you do that. I'm just saying some people do. And when I say some people do, I'm going back 10 days. Like I said, my 10-day rule. So, within the last 10 days, I had an agent. So by the way, we had 5 offers and they had a little brief spreadsheet of what the offers were.
Yeah. Does that help as far as like a time adjustment? Would that even influence that at all?
No, not with a time adjustment, but, it does kind of, it makes you realize that this, there's 5 people that were willing to buy this house.
Right.
Right. And the offers were actually all pretty similar.
Right.
And it wasn't $100,000 over
Right.
asking price either. It was slightly over.
Right. We have one last question or, yeah. Okay. Say that one more time.
How are past appraisals or any other live appraisals comparing to the amounts given by iBuyers or the resident valuation?
So how are past appraisals compared to what iBuyers are paying for properties?
Not past.
Like how are these, like an appraiser under contract, when Pat goes out and do it versus what we see online, iBuyers?
Gotcha. So what an
I'm not sure.
iBuyer is willing to pay, so when you go online and you have a Zillow or an instant offer or open door knock, they're like, hey, we'll give you X. How does that value compare to what an actual appraised value would be? Is that right? All right.
I'd never heard that term really, but we call them AVMs, automated valuation models. And, in certain markets, they can come pretty close. But, we're in Cabarrus County and, once we get below 49, some of the neighborhood, the homes are sitting out there by themselves. So that the data just is not that good that's going into that AVM. So I look at them time to time. I looked at my own home. We probably all have, but thankfully, I don't think they're that accurate because that keeps us appraisers in business, right?
Right.
If they were real accurate, they wouldn't need us.
Right. And I'll add something to that because we actually had a couple 2-3 months ago, we had somebody that came and actually broke that down. And so they would go pull up instant offer from whatever. And like online, it was like, instant offer, $500,000. And then you press the button, you go into it and you actually fill out the paperwork and they come back and it's like 460. You know what I mean? So like, don't take that first initial thing that you see as like pure gold. That's just to get you to, that's just to get you to bite, that's trying to get you to like actually press the button. So I know you had a question too, so I don't want to go. Yeah.
So Tina Anderson, DXP Realty, I was excited about the basement question, and I know that they're all different, but I'm hoping that you can give us just a little something on that as far as how to price.
Like how to price it when you're pricing the home, like how to give value to below grade.
Right.
So the question was, how do you price the basement?
Yeah, that's kind of a tough one. It kind of goes back to what I was saying earlier. When we're doing appraisal, the least amount of adjustments we can make, the better. Actually, I think our appraisals get scored.
Yep.
And so they get scored higher if they don't have a lot of adjustment. So the best way to value a basement would be to find another property with a like basement, right? So that's what we try and do.
So you just like literally, are they just going online, pulling up closed comps that have had basements and then look at the interior pictures of the basement to try and like say, okay, well, that house sold for X and it's got a like, because we all go into basements and they're cinder blocks and they're unfinished versus some that are just to the nines and just as nice as the above grade. Are you saying trying to match them up that way to establish somewhat of a value or?
Yeah, and in that case, like if you're in Kannapolis where there's some basements, you maybe expand your search and look what the term I hadn't used today because I didn't want to be, textbook about stuff, but it's match pairs, right? So you would try and find a home ideally, right, that's 1,200 square feet without a basement and another home that's just like it, 1,200 square feet with a basement. and look at the difference in sales price. And that's how we determine our adjustments. That's not always easy to do, but that's how we get the value, is by match pairs.
So it's not a certain percentage per square foot as you would upstairs. or anything.
Well, yeah, I mean, because if I tell you something, then you'll use it against me. You know, you've heard a rule of thumb of 50%, but they're really all different. They honestly, I've had homes in there from a lending standpoint. I know they're a nightmare because they come back to us and want us to explain it, but they're sort of multi-level homes, and they might have 1 bedroom upstairs and 2 bedrooms down. Well, that, you know, first of all, I go, why did I take this assignment? I shouldn't have taken this one. But, you know, in that case, we have to list it as a basement, but it's really not. You know, it's a multi-level home, and the lower level is the same as the upper level, and most of it is above grade, but technically a little bit, you know, is below grade. So, and then, you know, they said, well, we need you to go find a comp that has 1 bedroom above grade. Well, you're not going to find that.
So you're talking about possibly going out and finding a closed comp that has a basement, and then another comp that is similar in size but doesn't have a basement, and then kind of compare, okay, well, this is sold for this one for that. That's the value of that was the value given to the basement, at least to give you a baseline. But to your point, you go downstairs and then some, you know, some are walkout basements that are just beautifully done, and others that you can tell they've just done it themselves. So it's just, you know, I'm sure that's probably a moving target on what you assign for value, because you can't just assign like a flat number. It's like 50% of, you know, value or below grade for this.
I mean, we definitely can't.
Yep.
Okay. They're all very different.
Okay. Next question.
Good morning. My name is Jeff Wallace. I'm with Next Home Beaches. Coming up on my first year as a realtor.
Nice.
I have my first listing with just land itself, about 4 acres of land. I know we've been elaborating on with property with a structure.
Mm-hmm.
How do you appraise just land itself?
So the question was, how do you appraise land just itself versus the land with the structure?
Yeah, and really, I've completed thousands of land appraisals, and we really go through the same process. Is you're trying to find comparables and then trying to make adjustments, you know, for any differences. The topography, obviously size, number one, and then topography differences, zoning issues, water. Those are the factors that we typically make, you know, that those require adjustments typically. So I want to have one that's the same zoning if possible, or needs the same. You know, ideally something that's fairly close. Land sales tend, you know, the larger the acreage, the smaller per acre it sells for, smaller, you know, larger. And some people get tripped up on that sometimes. You know, 10 acres may sell for $5,000 an acre, whereas 5 acres would sell for 8. And say, well, they're right together, but just people tend to pay a little less.
I'd be leaning into the broker in charge, you know what I mean, or somebody that's been doing it for a long time to try and establish value there too. Those are always tough to do. We might.